Thank you very much, Jim. Our next speaker is Matt Manson, President and CEO of Stornoway Diamond Corporation.
Thanks, everybody. Let's get right into this. It's forward-looking information. So Stornoway Diamond Corporation, we're on the TSX. We are developers of what will be Quebec's first diamond mine. This is who we are as a board and management team. I'm the CEO. There's two institutions that have representation on our board by right. That's the Quebec government through Investissement Québec, who is our biggest shareholder at 25% of our common shares, and then Alico Eagle, represented with Yves Shirkus, their president, who have a 10% shareholding. Here's the basic investment thesis for Stornoway. The main thing is the asset, which I'm going to tell you about principally in this presentation. It's a fantastic undeveloped diamond deposit, one of the best in the world. It's going to be Quebec's first diamond mine, and the next diamond mine in Canada, we believe. Diamonds are a commodity with fantastic fundamentals. It's as a mineable commodity, it's something we're running out of very quickly. There is steady, accelerating growth for diamonds in the developing markets of India and China, and we're simply running out of new mine supply. Of all of the commodities which are here at the show and which companies are exploring for, diamonds are probably the hardest to find. There's only ever really been a handful of diamond mines in the world. It's a particularly tough business for exploration. It takes a very long time to find and define a diamond resource. We've been 10 years now since the discovery of the Renard Project. We're another 3 years away from production. That'll be 14 years between discovery and production, which is just about standard in our business. So it requires a lot of patience as an investor. The rewards are very good. We're in the home stretch, and all the heavy lifting of the exploration cycle is behind us, and we're now in the development phase. And with Stornoway, I think you'll see a very experienced team, and certainly with our Quebec government shareholding in the province of Quebec, we've got very strong political and stakeholder sponsorship in Quebec. So Renard is located in the James Bay area of Quebec. On the right there, those lines are the roads and power lines associated with the Hydro-Quebec network of power stations. So there's regional infrastructure all around us. Renard was discovered in the center of all this regional infrastructure, and that's now reaching in to connect to us, principally with a road in the dashed line there, which is being developed primarily at the expense of the Quebec government within their Plan Nord, and that's going to connect us onto the provincial highway network. And Renard is a series of kimberlite pipes and sheets. These are the ore bodies that host the diamonds and have brought them up from about 250 kilometers down. Everything is diamondiferous, but the mine plan is based upon the higher grade kimberlite pipes that are indicated in red and the darker blue in the southern end of that chain. Now, we're at the feasibility stage. We've got our feasibility out in November. So we're looking at an 11-year reserve-based mine life. Peak diamond production of about 2 million carats a year, averaging 1.7 over that 11-year mine life at $180 a carat. With operating cash flow of over $2.7 billion, this will be an $800 million mine to build, which is par for the course, and an OPEX of about $55 a ton, giving us a very attractive and industry-leading operating margin of 68%, up at the top end of the industry cost curve. If this was a gold deposit, to put it in gold terms, it would be 4 or 5 million ounces in terms of the resource that we can see right now, and we can see it growing to 8 or 10 million ounces, and it's open beyond that, and it's in diamonds. The feasibility study was authored by S&C Lavalin. Took about 18 months to do and was about a $30 million exercise, and a lot of bankable names here contributed to the study: AMEC, G Mining, Golder, and many others. So this is what Quebec's first diamond mine will look like. It's relatively simple mining. Diamond mining is very simple, relatively low impact in terms of the environment. Starter open pits on the Renard 2 and 3 ore bodies, and we expect to be mining Renard 6-5 in the back as well, which is shown as an open pit, but it's currently in the inferred resource category. Small footprint, 3 square kilometers. A dry stack for our tailings at the back, and the tailings are not expected to leach any metals or any acids, so we're not using a liner. It's a simple dry stack. Mine facilities, very simple. Diamond mining is very simple. It's a big crushing operation. You mine the ore, you crush it, the diamonds disaggregate from the crushed ore, and then you have a relatively benign tailings to deal with, and in this case, do a dry stack. The combination of open pit underground mining. The open pits will last just for a couple of years, and then we're into the underground mine with a shaft going to 740 meters. Blast hole shrink stoppage is the mining method. So we go in underneath the pit, we drill upwards, we blast, we cave the ore down, and we're going to be backfilling waste into the pits to maintain the stopes filled with either blasted ore or crushed waste, and we mine downwards, top-down mining method. So again, relatively simple, a big database of geotechnical and hydrogeological data supporting this mining method, and we're quite confident in the cost and the risk profile that's been established for this. So this is the kind of production schedule we're looking at. I'll turn your eyes to the bottom two graphs. That's carat production. Initial production in 2015, really hitting our stride in 16, and an 11-year mine life. And some of the revenue that this will generate is getting well over $400 million a year in gross revenue on a 6 to 8% operating margin. That's an EBITDA of the $200 to $250 million a year range. So this is going to be a big operation. Now, if there's one aspect of Renard that can be called world-class, it's this. And everybody likes to throw that term around in the mining business, and it's usually thrown around recklessly. But there's one element of this project that can genuinely be called world-class, and it's the upside going downwards. This is where our resource and reserve is distributed. 18 million carats in the green, so 3 ore bodies going downwards that we've drilled, we've sampled, we've bulk sampled, we've been underground here. $120 million of sunk costs in this project. The inferred resource is material that's less well defined with drilling. It has been drilled and sampled, but less well. And then that's 35 million carats. And then with a reasonable set of suppositions, kimberlites continue downwards, so project them downwards to the bottom of our shaft, and that's 24 to 49 million carats. That's 65 to 80 million carats, all within the scope of our mine infrastructure that the green rock is building. And that Renard 2 ore body there, this is our company making ore body. It's 1 hectare at the surface when it was discovered. It's 2 hectares cross-sectional area down here. It's getting bigger as you go down. And every 100 meters we go down, we're adding about close to $1 billion of cash flow and 3 to 4 years of mining. So the world-class aspect of this ore body is going downwards. And again, just to reiterate this is the growth in the resource in 10 years in this project. The last column is millions of tons. The green is the reserve. That's the feasibility. That carries the $800 million capex quite comfortably. The inferred is the gravy. That is very accretive to the project. That's the project we're permitting. That gives us more or less a 20-year mine life. And the vision is taking out all that material, over 100 million tons. That's where up to the 30, 40 years of mining. So this is a legacy project for northern Quebec. The schedule is production by mid-2015. That's based upon the critical path item here is this, road construction. Quebec is building a road, as I said before, to get to us. We will expect to have first vehicle access on that road by mid-2013. And you see it will connect us to the highway system. It's going ahead, it's real, and we're expecting to be able to announce the groundbreaking ceremony on that quite soon. This project is a poster child for the Plan Nord in Quebec, very high profile project in Quebec, and it's part of the infrastructure money which is coming from that road is coming from the Plan Nord. And I'll just finish off by highlighting we do have a pipeline of projects. We're not talking about it in this presentation, but we do expect to be drilling and for new kimberlites on our Saskatchewan project Piku and our Quebec project Aeon in 2012, and that'll be hopefully with the focus of discovery-oriented news flow next year. So $162 million market cap, more or less, 146 million shares outstanding, $20 million in the bank, 6 analysts covering us with 5 buys and 1 market perform between $1.50 and $3.40. We closed today at $1.08, I think. And Investis from Quebec, our biggest shareholder at Eco Rio Tinto, the float's about 50% or so. And the last slide that's the famous Aber diamond curve. I worked at Aber until 2005. That green arrow in the middle points to their feasibility study coming out for Diavik. It was $1.3 billion. It was a year behind schedule. That was the low point of that stock. They're the classic type stock for the Lassonde cycle for mine development stories, where the low point is before all the financing and the milestones and the permitting, and then you're rewarded by meeting those milestones with a de-risking of the project and value gain. That's where this company is. We're at that point right now. Thanks very much.